The stock market is a place where we can be wrong 50% of the time and still turn out great. No matter how smart we are or how much work we do to research the companies that we're trying to buy, at the end of the day, we still do not know what the future holds. Our most reasonable and probable assumptions based on available data could still be wrong. The best that we can do to protect ourselves is to buy the stocks cheap and leave enough margin of error. The good news is, a successful investor with a 50-year track record said, an investor needs to do very few things right as long as he avoids big mistakes. The top 5 big mistakes that are equally important to me are paying too much for a stock, not considering the risk of loss, gambling instead of investing, not having a process, and blindly following the crowd. I covered each of these topics individually in my previous videos. To watch them, go to my YouTube channel by clicking on my icon and click on videos. Here they are. So, how do we put this into action? As I learned from our super investors, we need to work backwards. Each time we look at individual stocks, we need to ask, why should we not invest in the company? Find the reason to say no. Pick the winners by eliminating the losers first. This advice from our super investors refrained me from investing in companies that have weak financial standings, which are the ones that were mostly hit each time that the stock market took a downturn. It helped me avoid startup companies that do not have any histories, which most did not last very long in business. I want companies that can fundamentally prove themselves to be worthy of my hard earned money. But just like the cycle of a human life, we have a beginning and an end, and so do businesses. Very few companies last multiple generations. New inventions replaces old ones, and new winners are born all the time. That's just how it works. Therefore, investors are bound to make mistakes. So finding a process to minimize those mistakes are super important. If we avoid the losers, the winners will take care of themselves. Half of our picks may not pan out, but as long as they do not cause too much damage on our wealth, the other half of our picks will do its job and bring us riches.